returning as a guest today, and we're really happy to have her back with us, is Liz Ryan, who's Executive Vice President and Head of Wells Fargo Health Benefit Services. Liz, good morning.
Good morning. Thank you very much for having me back. It's a privilege to be here again, so thanks.
Yeah, great to have you. Great to have you back on. How's the weather in Minneapolis today?
Well, I guess the way I'd shape it, it's fairly overcast, but, us Minnesotans, it's warm, and we have flowers blooming, right? So that's always a good thing, and we're heading into a celebration for Mother's Day weekend, and that's kind of a nice place for us to be. Better than January.
There you go. The last time Liz and I sat face-to-face in our office in Minneapolis, it was actually a very nice springtime day, and here's this Atlanta guy sitting in a sweater, and Liz goes, I can tell you're from Atlanta, not from Minneapolis. Well, Liz, give our audience a little update.
Sure, right?
Yeah, that's right. It is great to have you back on. Take a moment and kind of share with us, since you're on last, kind of where you've seen this market continue to move and change. Give us some perspectives, including what you saw coming out of last year's open enrollment period.
Okay, I'd be happy to. I mean, I would tell you the HSA industry is just seeing a convergence of all different types of trends impacting the industry, which is actually propelling it. We had a record year last year on top of a record year. The growth trends. Yeah, the growth trends just can be summed up by saying the industry is experiencing what I would call a hyper-growth mode. We had record numbers for accounts and record numbers for asset under management. So, Doug, as you know, this industry continues to evolve. I think last year a couple of different consultants would categorize it as having 14 million account holders with over $24 billion in assets under management. And I think it's realistic to think about this industry surpassing $30 billion in assets under management by the end of this year. So we are very, very busy, needless to say. I mean, if you take a look at Wells Fargo, we had our most successful year on record with more new accounts than in any previous year. Our growth was about a 30% clip, and so today we stand with 600,000 accounts nationally, with more than 1.7 billion in assets under management. So it's a busy but fun time to be in the HSA space.
Yeah, it really is, and it took us all 10 plus years to get to that 14 million number and that 20 million number or 20 billion number. But I think you're correct that the next 3 to 5 years are going to be exciting growth when you parallel that with the full you've got full placement adoption programs really accelerating out there. You've got the emergence of private exchange that are going to be very viable, and all the early indicators that you probably see too is that consumers and exchanges are buying down to HSA plans.
I think you're right. I mean, I think, as I think about what's on the mind of HR professionals, regardless of the industry sector, they're trying to bend the cost curve for healthcare, right? And I think the conversation is very different than, say, what it was in 2008 and 2009 when they were just thinking about the cost curve. Now they're trying to balance that objective with the mandate to offer competitive benefits, right? Yep. And let's face it, unemployment rates are down. There are a lot of areas of the country that have seen great economic improvement, and some of the industries have a talent shortage, right? So this talent shortage has really changed the benefit conversation.
Yeah, it really has. And and the conversation about an HSA being a legitimate retirement vehicle is beginning to be listened to by consumers. They're beginning to understand it and become much better educated on how that is truly, as you put it, a long-term asset.
Yep. I think the industry's made some inroads. We're starting to talk more seriously about the HSA as a long-term benefit where it can be considered, dare I say, a supplement to Medicare. I don't think we had that conversation, say, a couple of years ago. And if you think about the 401k industry, there's a lot of similar trends. I mean, when the industry was in its infancy, you didn't really talk about it supplementing the Social Security. Obviously, in today's environment, you do talk about it that way. And if you take a look at the millennial employee population, right, this long-term message has tremendous upside benefit to a company in terms of how they deliver benefits. Remember, the millennial's not saddled, let's say, with what they used to have, and they're not saddled with having to make changes. They enter the workforce with the understanding they've got to save for retirement, and now they're looking at healthcare benefits with an eye towards consumerism. I mean, the fellow that just spoke from Witherings, right? Those types of concepts, in addition to like telehealth, for example, virtual biometrics, where people can monitor their health daily, I think are not necessarily things of the future, but now. And I think an employer wants to provide education and insight to support those wellness concepts. And they like the idea, meaning the millennial population, they like the idea that they can be rewarded with the HSA as a long-term benefit.
Hey, Liz, this is Ron Bachman. I was just looking at the 2014 year-end Devenir HSA research report. That's where they sort of watch over all the accumulation for the whole industry. And they show, $19.4 billion of contributions last year and about $13.2 billion of withdrawals to pay for some of the deductibles, the cost-sharing features that are in the plan. But it also shows that people are accumulating funds over years. They put some in, they take some out, but the dollars are accumulating, and they're getting rather significant. So tell us about the investment differences between somebody who's got, $10,000, $20,000 maybe accumulated. They're not putting it into money markets, so maybe are they putting it into, equities? What are they doing with the funds as they accumulate to larger amounts?
That's a great question. Our clients and clients who actually have transferred over to us, let's say from another provider, they're looking to evolve the benefit strategies beyond just the basics, and I think that's kind of what you're hitting on. They're not just talking about it in terms of it's tied to the insurance plan, right? I mean, people are getting more comfortable with the notion that the HSA can be considered a long-term benefit, not a 12-month spending account, maybe to your point.
Right.
So when we think about the HSA consumer, today almost 70% either save or are investing. So that means just a third, a little less than a third, is actually what we consider a true spender. And so I think the paradigm is shifting more towards, I've got a little bit of money that I'm going to roll over. Nothing dramatic happened to me. This is actually a really cool thing because it's my money and it's portable. And so folks are starting to take a look at what their options are to invest. And I think what we've tried to do is be fairly conservative with a perspective on how you should be thinking about investing. We've got a fund array, for example, that a consumer could take a look at, and that fund array has a lot of diversity in terms of choice. What we tend to see more times than not is the typical set it and forget it. So we offer target date funds, we offer index funds for folks that want to do that, and that tends to be the more popular funds that people get into.
Right. Well, and I guess what you're talking about, lifestyle funds. So according to what age you are, your investment strategy can be different. And sometimes the funds will take care of that automatically as you age, especially for the younger folks. But the whole issue here of CDHP and HSA accounts is obviously growing, as you said. It's exploding in a lot of ways, but in other ways, it's not taking off as fast as many of us would like. We're obviously big proponents here at the Institute for Healthcare Consumerism. There's various studies. It seems like the largest employers are the ones that have adopted it and have been putting money in. As you get to the smaller employers, they're not as active. They may not have as many HSA options for their employees or have any at this point. What do you think might be holding the industry back in terms of that we may have somewhere between 20 and 25% of employees with HSA accounts? How do we get to 50%? How do we expand on those that could actually be making contributions into your funds?
I think so much has to do with the education and awareness of the benefits. As I travel around the country, we still have a long ways to go with respect to making sure that people understand what the HSA is and what the HSA isn't. In the early years, I think we treated it so closely aligned with the insurance plan that we really didn't do a very good job in the industry of really sharing best practices around how an individual could really take ownership of his or her account and take ownership of his or her health and wellness. And so that that infancy, I think, is starting to emerge, and I think that's why you're starting to see asset accumulation. I think that's why you're starting to see, I'll use the term the hockey stick approach with growth. I mean, Doug, you mentioned in the next 3 years what we think we'll see with the growth. I'm actually very bullish on that growth materializing, where it's going to be rapid and upward. And I think that adoption will propel itself if we do a good job in the industry with providing the necessary tools around educating the employee population. And I'll give you an example. One of the things we did last year is we launched an interactive educational tool where it wasn't, just something that the employee would watch. They would be asked questions, and they would enter in answers, right, around their own behavior, and then they were educated on the HSA, whether you were going to be a spender, a saver, or an investor. And we had phenomenal success with that. And I think one of the things that we're going to continue to do is reinvest in those types of tools so people can become more educated on how to use the HSA.
Yeah, and I think the overarching, and that's just because we're sitting here with the Institute of Healthcare Consumerism, we do believe of healthcare consumerism megatrend, but, I talk a lot about, healthcare consumerism is moving from the back road to the main street, and along with that, the HSAs, which is a key vehicle, connected health, and everything in between is benefiting from that because the focal point is on that consumer and educating that consumer about plan design, about tools to become better consumers of health and healthcare. And I think that all transcends to faster HSA adoption, faster HSA growth.
Yep, I agree. I mean, I think the industry continues to do a better job of containing costs, right?
Yep.
I mean, I know the last couple of years, the Center for Medicare and Medicaid Services looked at from 2010 to 2013, and we saw the 3 slowest growth years since the record keeping was done in the 60s. And I think as I look about the healthcare industry, it makes up 18% of our country's GDP. And estimates expected to surpass 20% by 2021. And that's not a sustainable trend line. So we've got to come together as a society and figure out ways to bend that cost curve. So I think our clients and our industry are making inroads, but I also recognize we've got a lot of way to go.
Yeah. Hey, Liz, we got about 3 minutes to go, and I want to give you the opportunity to talk about one thing that you speak a lot about, and I think it's an important issue, and that's safety and security. Talk a little about that and what you guys are doing, but what your concern is and why you think that's a paramount issue.
Yeah, that's a great question, Doug. I mean, so many of our customers, are looking to us for insights and advice, and I would tell you at Wells Fargo, security is core to our mission in safeguarding our customers' information. It's at the foundation of all we do. I mean, we've been in business for 160 years and have a long-held culture of safeguarding our customers' financial assets. And I would tell you, in today's dynamic world, we constantly monitor the environment. We assess potential threats, and we take action as warranted. We invest heavily and we reinvest in keeping our customers' information secure to provide the best service. And as I look at our HSA business, we own and develop and manage every technological aspect of the HSA. And maybe another way to think about it, if you think about the employer administration, the HSA deposits, maybe the HSA investments, those all sit on a Wells Fargo platform, which is the same platform that all of our Wells Fargo products are on. It's not just about the HSA. I think the last thing that I would leave you with is in terms of how to think about the safety and security. We recognize we have to be vigilant, but we also need our customers to be just as vigilant in helping safeguard their employees' money.
Right. Liz, I really appreciate you being on the program today. Leave our audience with a couple other thoughts, if you may.
I'd be happy to. I mean, I guess I'd shape my thoughts into, let's say, 3 buckets. First is education. We've talked already about that. How do you help drive employee engagement? We've launched the interactive educational tool, and I think we'll continue to invest in some of those things. The second area is mobile, right? While we have the mobile app, and a lot of folks in the industry have the mobile app, I think you'll continue to see the industry involved where we'll add more functionality for the account holder. Specifically for us, Our customers want to view information and transact, so we're customizing information into a healthcare spending report, which will give them more granular data and allow them to have that on their device. Things like the Apple Pay endeavor, we launched that last fall. These things are all very, very foundational to the types of endeavors we'll invest in. And I think the third, you can never underscore it enough, Doug. It's always important. We will continue to invest in keeping our customers' information safe and secure. One of the cool things that I think is upon us, and we've got it in a development lab, we're focused on authentication frameworks using biometric solutions based on voice and facial recognition. And I guess the way I would like to explain it to you, Doug, is imagine a time where you don't have to use or remember your user ID and passwords. Instead, it's your voice is your password. I think that's a much better experience. I know personally for my sake, I'd rather use my voice as my password than have to remember countless passwords. All of these things are under construction at Wells Fargo, and it's a really, really exciting time for us.
Liz, thank you so much for joining us. I know your team will be with us in Atlanta at our IHC Forum and Expo on July 23rd, 25th. Hope you can join them down there. It would be great to see you. If not, I'll see you up in the Twin Cities soon.
Always thank you. It's a pleasure. I appreciate it very much, and I enjoy your show tremendously. Thank you.